so much for joining the live webinar on CFO priorities, digital trends, and transformation strategies for finance and accounting. My name is Vignesh Kannan and I'll be your moderator for this webinar. The objective of today's discussion is to provide you with an overview on CFO best practices to measure KPIs, actionable insights by integrating AI, and a roadmap for a resilient finance function. I also do have a set of obligatory housekeeping notes to go before we officially get started. While all lines are on mute by the default setting of the webinar, feel free to chat with us, ask questions, and show your reactions using the Zoom control panel. Drop your questions in the Q&A section and we'll make sure to address them at the end of the session. The on-demand recording and presentation will be available to all participants after the webinar. All right, so let's get started. Our panelist lineup for today includes Vignesh Kannan, Vice President, Business Process Services team at Everest Group. Vignesh assists clients on topics related to optimizing business process service delivery models, go-to-market strategy, peer assessment, competitive intelligence, and future investments across industries and geographies, with an emphasis in finance and accounting, procurement, and supply chain management. Vignesh's responsibilities include leading Everest Group's finance and accounting outsourcing and procurement outsourcing subscription offerings and advisory projects. Thank you so much for being there with us today, Vignesh. Secondly, we have with us Navin Gupta, EVP and Head of Global BPM at Datamatics. Navin has over 30 plus years of experience in operations, delivery, business consulting, and program management. Navin is also an industry leader in F&A transformation projects. His core strengths lie in delivery management, incubating new practices, and managing digital transformation. In the past, he was instrumental in building the ERP practice, Oracle and PeopleSoft in multiple organizations. Thank you so much for being there with us, Vignesh and Navin. Over to you.
Thank you, Muskan. So let me just walk you all through the agenda. We will be talking about evolving role of CFOs, how it has been changing post-pandemic and what responsibility they are taking. How are the CFO requirements emerging? And what is the role of digital in building agile and resilient function? Benefits of an efficient and resilient finance function. What are the various transformation approaches? How third party can provide you with the finance transformation? What is the role they can play in the entire transformation journey? And what are the Datamatics capabilities to help you with your transformation project?
So yeah, thanks Navin, and thanks everyone for joining. I hope you are having a great day. So before we get in, quick context, and we have been in difficult times, and the world is changing so fast, right? And how organizations are reacting to some of the disruptions that is ongoing or happened due to pandemic or some of the recessionary headwinds and the economic uncertainty that we are in. The role of CFO has changed drastically, right? If you look at, say, even 4 or 5 years back and compare it to now, I would say this is CFO's decade, right? A lot of organizations are changing their business model, adapting to new consumer demands, and what previously used to be, a very cost-focused, efficiency-focused function, which is finance. And now the role of CFOs and the finance function has elevated to next level, right? CFOs are playing a much more strategic role in driving organization objective, right? And in this webinar, let's explore how the CFO's role have emerged, and how F&A transformation can aid in achieving the broader business objectives. Right. Now we look at how has CFO's role evolved. If you look at earlier, CFO's role was more siloed and focused to just the finance function, and the objective and the role the CFO and the finance function was playing was largely domain focused on bringing efficiency, cost savings. It was a very process-centric role. Right now, if you look at the evolved role of CFOs, it is much more strategic in nature. It's no more focused on bottom line, no more focused on just the finance processes. CFOs are playing a bigger role in taking organizational decisions, right? Including the investment areas, which direction the organization should be going in, and it is no more siloed to a particular function, and they are playing a driver role in a lot of broader organization initiatives. To give you an example, post-pandemic or in the recent time, ESG goals and sustainability have become greater focus for a lot of organizations, right? And even in such broader organization initiatives, CFOs are driving those initiatives, right? And the expectations from CFOs have changed significantly. Now they are seen as a business partner and a facilitator who can bring in different functions, be it your IT function, your supply chain, your procurement, in driving organization-wide transformation. Post-pandemic, agility and resiliency have become a key priorities for organization, given the pace of change that we are in. And CFOs have become an architect of building an agile and resilient function. And we'll discuss, how they are executing it, what are the approaches that they are following in a while. And looking at transformation, yes, finance transformation is important. And in most organizations, finance transformation is where with the finance function, the transformation starts and it percolates to a different function, right? And they are also playing a bigger role in a lot of other transformation initiatives, right? With that, the requirements of CFOs are also evolving, right? Digital transformation is, of course, a key priority, but looking at some of the other aspects, right? Say, bringing in organizational visibility, right? Data and analytics become a key priority for organization. It's no more your KPI reporting or SLA reporting or a performance monitoring. It's much more than that, right? Bringing in some of the predictive analytics to optimize your cash flows or working capital has become a key priority and a requirement for CFOs, right? And looking at the changing world that we are in, finance function, though it's very horizontal in nature and industry agnostic, the importance of bringing in industry specific nuances, right? The industry specific services have become a key priority. And given the world that we are in, it has changed from a process centric finance function to a automation driven autonomous finance function to now we are in the economy of AI driven finance function, right? So your data control, security, compliance, and the risk that comes associated with that has become a key concern, and managing that is becoming a key priority and the requirements of CFOs. And all this calls for a transformation of finance function, right? It's no more an option now, right? Most organizations have in some shape and form in the entire transformation journey. But let's look at how the approach to transformation and the mindset to transformation has shifted. Looking at the different eras, and when I say eras, it's not decades, looking at the recent years, right? Pre-COVID, during COVID, and post-COVID. Look at the mindset and what CFOs approaches to transformation were. In the pre-COVID era, yes, the next-gen technologies like your RPA workflows came into the picture. And the approach that CFOs were taking at that point in time was, more siloed in nature, looking at, say, how can I automate my invoice processing? How can I automate my general accounting? It was more of a piecemeal transformation. Of course, there was a value aspiration there, but largely it was constrained to efficiency-oriented, process standardization-oriented transformation. But things changed drastically during that COVID period, right? Those 2 years kind of accelerated the mindset of CFOs to start thinking about the bigger picture. But during COVID, a lot of organizations were in distress, and it changed the shift back to cost focused, right? There were a lot of focus on bringing in some quick cost savings. What are some of the quick wins? What are the technologies that I can implement which can give me a ROI in months time frame, right? So a lot of we saw a lot of liquidity oriented projects that can give in short term cost savings. But as we settle into the new normal, now they are taking a breather and thinking about how can I make my transformation much more sustainable, right? So the focus has now become a long-term, yes, cost savings, bringing in some cost efficiency is still a focus, but we are seeing much more increase in investment appetite, right? Making investments to have that, to achieve that sustainable outcomes. Now the focus has shifted, or I would say evolved from just the cost savings towards how can a finance function bring value. So the entire approach has changed from cost focused transformation to a business outcome focused transformation.
So if we look at the evolving digital transformation landscape, right, you start with the task automation, which is just with one tool, maybe for your OCR, for capture of the data. And then you move on to the process automation, where you are using a multiple tool integrated with each other, orchestrating the entire life cycle of the entire process, end-to-end process, where you are orchestrating across the function. And finally, the business operations and the creation and the reinvention again at the top, which is also giving you a power of analytics as well as a power of a data for making a decision. So this is the entire journey and the landscape which you see it evolve when you start with the automation or digital transformation as a project. So basically what all of us when we are embarking on the journey of a transformation, we do the benchmarking. We do our current state assessment. We compare it with the best in class in the industry. We set up our roadmap that where we want to be in the best in class benchmarking what we have done and a comparison with our current state. Then we bring in the automations, tools, technology, and the levers with the integration of the ERP or the system which is running the organization. Then we put analytics on the top of it, which helps us in day-to-day decision making, which help us in intelligent and smart decision making, along with very happy user experience of running the entire automation process, because it should not become a pain for running the automation. But if you look at the benefit from the resilient finance transformation, your operating cost is saved quite a lot. Your turnaround times become much faster. Your accuracy becomes much faster. And for example, even if I talk about invoicing, your duplicate invoicing is close to zero or negligible. So the effort involved for collecting those duplicate invoices and rather than writing off, because many organizations, the CFOs I have spoken to, generally it is so hard to get a duplicate invoice payment back that they write off at the end of the year, which is a direct savings to the bottom line of the organization.
Yeah, looking at Navin spoke about automation and some of the technologies, how they're adding analytics layer, how to build a good user experience, right? And in the current environment that we are in, there is a whole lot of technologies and softwares that exist in the market, right? Including if you look at the end-to-end value chain of a finance process, starting from your procure to pay, your order to cash, your record to report, and FP&A. The ecosystem of technologies that are available in the market is immense, right? And a lot of organizations, at least the experience that we have had, they embarked onto this transformation journey without a proper roadmap, right? And I'll pick up on what Navin mentioned. There is process benchmarking and there is digital adoption or digital implementation and bringing a good user experience, right? So building off a resilient finance function or moving towards a digital-led finance function, it's not just about implementing digital technologies. Right? You should look at all the adjacent factors. Right? The most important one I would say is building the process right for digital adoption. Right? Again, I'll quote Bill Gates here: automating an inefficient process will make it more inefficient, right? So organizations should really focus on understanding the process and optimizing the process first before automating, right? That's where your ability to you benchmark your processes against industry best standards and looking at is this a task that is worth automating? Do we even need this process, right? So that process optimization is much more critical than digital implementation, right? The other aspect is planning properly and coming up with a roadmap and strategy on how the finance ecosystem and the associated talent is going to evolve with the digital. So automating your process, implementing a digital would require significant change management. And I know change management is a word that everyone uses more frequently, but it is very, very important to analyze and understand what's the impact that it's going to have on the talent. Now, coming to the digital part, right? Again, as I said, there are a lot of technologies out there. There are your underlying core system of record, your ERPs, and then there is a bunch of automation tools ranging from workflows, BPM solution, and point solutions like RPA. And there are a bunch of analytic solutions and user interface like chatbots, virtual agents, right? But the key here is to how you are orchestrating this solution, right? How you're bringing these all these technologies into a orchestrated manner, right? So is your technology able to talk to each other? I don't know how many of you are movie fans or Marvel fans. I'm a huge Marvel fan, right? So I'll quote an analogy from there. Think of each technology as say automation, analytics as a superhero, right? This orchestrated platform or a digital capability is like Avengers. Like sum of parts is the whole is more than the sum of parts. So it is very, very important that how we are building the fundamental layer so that each technology can amplify the value of the other technologies and complement the value of other technology. And it is also important to make this orchestration a continuous process. It's not just one-time implementation and then you get done with this, right? How do you improve the process and how do you take this in a journey in a continuous manner is very, very important, right? And implementing this taking this platform-based approach, not a point solution-based approach, have significant benefits, right? It's not just about, okay, I automated my invoice process and eliminated 2-3 FTEs and that's cost savings for us, right? How do you think about scalability of this, right? It's I've seen a lot of organization, implementing an automation tool, taking automation licenses, enterprise-wide licenses, and not able to scale it up right, beyond a point, right? So there it comes, how do you prioritize your use cases? How do I think about the end-to-end value chain and the impact of that on the talent? And talking about the role of CFOs, to my earlier point, CFOs have now become a custodian of organization data, right? CFOs or the finance function sits on a huge volume of data. So analytics tools, especially given in the current state, the sophistication of analytics tool with AI coming into the picture has evolved a lot as it has moved from a descriptive or a reporting based analytics to a predictive and prescriptive model, right? So leveraging that data analytics tools to drive decisions, right? Being moving from a intuition based decision making to a data driven decision making is very, very critical, right? And lastly, finance have in the past have never been user-friendly function, right? It is now a lot of organizations are moving towards an experience-driven finance. One is your process, efficient process, automating, bringing in analytics to drive decision is good. But stakeholder experience is equally important. Not just it's just a back office function. So experience is not important. The days are gone, right? So equal importance should be given to stakeholder experience, be it internal stakeholders or external stakeholders. Now, looking at the role of third-party providers, and we have a poll coming in as well. And as we are talking about generative AI, we'll discuss about that. But we want to get your opinion on how you are thinking about generative AI. I know it's a huge buzzword in the industry. A lot of organizations are exploring that. So keep your answers pouring in, and towards the end, we'll discuss or share our perspective on generative AI. Right? Now, coming on to role of third-party providers in digital transformation, right? We ran a global CFO survey in which around 300 CFOs participated, and we asked about different operating models that finance functions, and also try to understand where the industry or where the organizations are heading. Right? Looking at different operating models, there are in-house operations. A lot of large organizations leverage their own captive shared services center, and of course outsource some of the operations to third party. And in the recent, say, 3 to 4 years, the openness to engage with third parties have increased significantly. And if you look at the chart here, even organizations with their own shared services center, almost 3/4 of the CFOs have said, hey, we want to engage with third-party providers, right? And it's not just outsourcing of your processes for a third party to run day-to-day operations, but the role of the third-party providers in handling finance operations have also evolved a lot, right? On the right-hand side, if you look at the chart, we asked, hey, what is the role of your the current role of your third-party providers, and how do you expect your third-party provider to act in different dimensions, right? Day-to-day operations, there is that's the core that has been there, right? But they are also playing a bigger role in driving digital transformation, not just in execution, but also providing strategic support, developing a roadmap. And I spoke about the importance of process optimization, building a long-term roadmap, not just looking at immediate cost savings. So third-party providers are playing a much more bigger role in driving that transformation by bringing in the expertise and experience that they have, and the digital solutions that they have built, not just solution, but also ability to bring an ecosystem, right? Understanding of other third-party platforms that are in the market. So we see a lot of involvement beyond managing the day-to-day operations from third-party providers. Also, there are outsourced operations with providers handle and drive digital adoption in the scope that they are handling. But we are also seeing providers playing a huge role beyond the scope of outsourcing. So supporting in-house operations. How can an organization leverage third parties, say L&D programs that they have built for their own employees, right? Tapping onto that expertise and experience is one example of where providers can help the in-house operations, right? And with this evolved role of third-party providers, we are seeing the nature of engagement is also evolving, right? So it's no more now, I'll measure third-party provider on, say, accuracy or a timeliness related KPIs, right? Organizations have started tracking business outcome oriented. What impact a particular provider can have on business outcomes, and not just bring in cost savings by offshoring, right? Cost savings, again, to emphasize, it is still an important factor, but the ability of a provider and the role of a provider to impact the end business outcomes in a finance context. For example, the most common areas where providers are playing an active role is one is FP&A, right? Providers may not organizations, given the core nature and the importance of that function, it's not commonly outsourced operations, but the ability of a provider to bring in sophisticated analytics tool and improve the process of FP&A, how the core financial planning and analysis is done, bringing in insights to CFOs to run the operations. That's one example. The other areas where we have seen impact is improving the liquidity, cash flow, working capital, impacting metrics like DPO, DSO, reducing bad debt, right? Duplicate payments is one that Navin mentioned, right? So I would say the nature of outsourcing has evolved a lot. It's just no more offshoring, right? No more, hey, I have outsourced, you handle that. It's a separate operations, and I'll measure you on the performance of the scope that you're handling. And we'll also talk about with the change of the nature of work that a third party is providing, how the engagement construct, and what are the different models. We'll talk about it in a bit. But Navin, based on your experience, any thoughts, anything to add on how you see this evolution happening?
No, absolutely, Vignesh. If you look at all my interactions with the CFOs, maybe 5 years back, we were talking about turnaround time, accuracy, and quality and turnaround time were the only two KPIs we were talking about. But as you have rightly mentioned, now we are helping the CFOs with the reduction of our working capital so that the interest burden on the organization is less. How can we make it more efficient? How can we actually improve their cash flow? How can we reduce their DSO and DPO? So those KPIs are becoming much stronger. And all CFOs today are expecting us to actually help them achieve or succeed their KPIs with the shareholders, their KPIs with the other stakeholders. So you're absolutely right. And that is the direction which all digital transformation journey is helping CFOs to achieve.
Great.
No, and that's the reason that this will actually complete the entire picture. If you look at in-house digital transformation, it's a divided focus because people have to run business as usual, right? And so the devotion of the time and the investment of the time is pretty less, and that's the reason your gestation period to automate first process is very long because you are running the current business. And then there are internal business conflicts, and then you recruit people from outside who are specialists and which is at a very high cost. And also, this is not bringing any outside in perspective. This is just, you are trying to, as Vignesh was mentioning, Bill Gates dialogue. If you automate a process which is bad, then the outcome also would be bad. And difficulty in making the tough choices. I was talking to one of the customers as an example, and they were talking, it was in 1970s. They had their own aircraft shuttle. They have 70 aircrafts shuttling people from New Jersey to Chicago on a daily basis, right? And then when things change, when you're making a choice to shut down because that's not their core operation, the people were not happy. People were very unhappy, and they were not letting that change happen. Similarly, if you look at the y-axis, the implementation partner plays very, very important role, along with the ability to have a domain knowledge. And that is where your digital transformation via BPM give you inroads to a tech expertise at your disposal, readily available tools and technology platform. They know what all are available, which fits your bill absolutely correctly. And it's a fail fast approach. They work quickly on a POC. If they succeed, they succeed. If they fail, then you have only lost maybe 2 or 3 weeks or 4 weeks of a time for doing that POC. Bringing in the consulting expertise as well as the industry benchmark and the best in class. Now, you may decide not to go in for the best in class because ultimately you will also look at a ROI and cost benefit analysis, and you may settle down somewhere in middle. But these are the things which, if you take a help of a partner and a consulting partner or a BPM organization, then you would make sure that you are making the right choices. So, and that is also what is more important for any intelligent BPM solution. You need to look at the objectives. What are my transformation levers? Am I automating my repeated tasks? Am I implementing on the cloud-based financial management system? Am I streamlining, as Vignesh was talking about earlier, FP&A function? What are the risks and how I'm implementing the risk management strategy? Am I leveraging the latest of the technology? Vignesh touched upon artificial intelligence and machine learning, and with now ChatGPT coming in, am I really using the right tools and technology? Strong change management is the most important factor for either success or a failure of any of the projects. And the benefit which you get, Vignesh touched upon enhanced data accuracy and accessibility is the prime, because CFOs are sitting on lots and lots of data. Optimizing your cash flow management, we spoke about earlier, creating an agile financial reporting process, which is helping you take a decision. Of any decision which you are making is a smart decision with the help of your financial reporting process, along with maintaining the data security and privacy for your customers and your entire digital ecosystem and the environment.
Yeah, Navin, on the previous slide, I'd like to emphasize one point, right? A lot of the questions that we get is there are concerns within the organization, right? Hey, is digital a threat to my job, right? Will it impact my people, especially in-house? Yeah. The organizations handling in-house operations, or even large-scale captives. There is a kind of a reluctance in getting to a transformation journey. On that, actually, I was doing a session yesterday, and one of the speakers quoted, and I'll re-quote that, right? So finance professionals, AI is not going to replace a finance professional, but a finance professional with AI knowledge will replace a finance professional without AI knowledge, right? So I like that quote, and the way the finance function is heading is that digital and human will coexist. So it would mean significant upskilling and reskilling of talent, right? So a lot of organization emphasize on digital and digital implementation, but that talent upskilling and reskilling is equally important to make this successful transformation, right? And we had a question around generative AI, and it's interesting to see a good mix of both the options, active and wait and watch. Maybe I'll share some perspectives on how we are seeing Gen AI as a tool. And again, from a definition perspective, I don't see generative AI as a fundamentally new technology like a blockchain or a metaverse, right? It's a significant evolution of traditional AI. So the ML and NLP has always been there. What makes this Gen AI so cool and exponential technology is the sophistication of their machine learning model, right? So to give you a comparison, GPT's matured ML model has 175 billion parameters that define the model, right? And before GPT, the largest ML model was from Microsoft's Turing with 17 billion parameters. So it's a fundamentally same technology, but with significant leapfrog in the sophistication, right? And the role that generative AI will play in finance function, again, it's everyone is exploring. Providers are making significant investments in building a COE or exploring the use cases of that. We have seen a lot of adoption in customer facing, say a contact center or a help desk kind of use case. But finance, given the nature of the confidential information, the importance of security, finance as a function is kind of in a wait and watch. situation, right? Some use cases, pilots that we have seen in, say, reporting and PO creation, right? But these are still in experimental stage, I would say. Navin, do you have any different?
So basically, I have seen a lot of use cases coming using generative AI or GPT for the finance functions as well. For example, I was talking of a duplicate invoices earlier. So there are multiple logic earlier which were used through a code where they are finding duplicate invoices through either a PO match or an invoice number, invoice amount item. But then there are so many real-time cases where against the same PO, there are multiple invoices of the same quantity, same item number, same unit value, as well as same invoice value. So are you really flagging them as an exception? And that is where your artificial intelligence comes in handy to look at the pattern and the natural language processing to past history and then really flag the right suspect one. Because you don't want to flag wrong suspect also to invest your time to take a judgment call on that. Similarly, on the rating, either on the vendor or the customer ratings and all, generative AI or AI artificial intelligence is helping a lot in other parameters related to rating of the vendors and the suppliers. So there are many use cases which are coming in. And like Vignesh, you mentioned about the statement, and in one of the panel discussion, someone made a statement that in future belongs to only two kind of a companies. One, who are using generative AI as the co-pilot, and one who does not exist.
I'm gonna use it somewhere else. Good perspective. Yeah. Okay. Now we spoke about technology. We spoke about a role third-party providers or service providers can play in a transformation journey, and we also touched upon building a agility and a resilient finance function, right? Now, looking at how to work with third parties, right, and what are some of the newer models that we are seeing, and looking at the types of commercial constructs that are that we are seeing common. Predominantly, earlier it used to be a T&M kind of a model, then it moved to a managed services where on a FTE based pricing model. Now with a lot of digital infusion happening, the construct and the nature of engagement with third parties are also evolving, right? So based on our research, we are seeing what used to be a predominant model, which is a FTE based or input based pricing model, is declining, and a lot of organizations which have adopted digital technologies and are working with third-party providers are moving towards output or outcome-based pricing model, right? Say transaction-based pricing model is one example of a output-based. So based on service provider gets paid based on a number of invoices processed, right? That's one example of a transaction-based pricing model, and this is predominant in areas where providers are providing services in an as-a-service model, leveraging cloud technologies, right? And we are also seeing some outcome-based pricing model where providers are impacting business outcomes. Say, again, taking bad debt as an example, right? Say a provider is handling F&A operations, and if they're able to reduce bad debt by X dollars or bad debt recovery, and they come to an agreement and work on a gain share model, right? So I'll recover your bad debt and take 20% share. So that's an example of reward model, right? And we have also seen a lot of risk related model where there is upfront commitment on productivity. When I say upfront commitment on productivity, and in some cases where we are seeing upfront commitment on some of the business impact metrics as well. Say, for example, working capital is one, or collections is a great example, right? Upfront commitment on X dollar over 3 years is a commitment that a provider is making. If they are not able to achieve that, they get penalized on their fee, right? So we see more skin in the game from service providers to impact the operations and business outcomes. And co-innovation model, partnership model is also evolving, right? So where this is something that we have seen where there is the nature of relationship is much more strategic and beyond operational focus, right? And organization should really, if you are planning or if you are engaging with a third-party provider, tapping onto their full potential and how we can get better value from your current construct is very, very important. And how do you build a construct that promotes innovation, right? So that's where we've seen a lot of co-innovation model coming into the picture. So say one example is self-funded transformation models, where a provider make a commitment on, I'll bring in X% productivity over 2 years, and then reinvest those productivity gains into further transformation. So that self-funded transformation is one common model that we have seen. Other model is where there is an agreed commitment on upfront investment in transformation. So it could be, say, 1% or 2% of the TCV being allocated for transformation projects, right? Where both provider and the organization work together. So it is very, very important to have joint KPIs, looking at process from an end-to-end angle, not just measuring in-house performance using certain set of KPIs and outsourced operation using certain set of KPIs. There is no innovation. There is no incentive to promote innovation. What happens in that traditional model is it'll create a watermelon effect, right? All my KPIs are green, but still there are issues underneath, right? So it is as your model is evolving, as your priorities and expectations from a third parties is evolving, it is also important to evolve your engagement construct, evolve your commercial construct, relook at the KPIs, having the right KPIs, right incentives to promote collaboration, promote co-innovation is very, very important. Right? And coming to transformation, one is, we discussed how to work, how to engage with third parties so that you get most value from your engagement. The other is, how these transformations are being funded, right? One, we have seen, digital, fully variable digital FTEs, right? So where there is a significant amount of automation coming in. Still, if it's a combination of a FTE-based model and a digital FTE-based model, the fully self-funded transformation is something that I spoke about. Innovation fund to start projects. So this could be a joint funding, or provider puts skin in the game and recover that cost over the year. So upfront investment from the provider to improve your process, improve efficiency, and then they recover the gains over the period of time. Front-loading transformation is another example where there is an upfront investment from both the parties, upfront commitment, and then amortize it over the years. Right? There are multiple models to that, but Navin, any out of these models, out of these different commercial construct, anything interesting, any model? So
basically, innovation fund to start the projects and the commitment from both the parties is what I've seen finding more success. Because look, whatever is commoditized, whatever is normally available, right? Those are known to everyone. It is only on the complex process where they don't, either the customer or the provider, they have not seen that complexities available in the market. So they have to really join hands together and commit a fund, innovation fund to start the projects. That is most interesting, and I'm finding that more in practice, because simple thing or commoditized things, all of us know.
Yeah.
So let me just talk about whatever we have spoken till now on one of the case studies of global paints and industrial coating manufacturer, right? Increases the process efficiency by almost 40% just in accounts payable. I'm not even talking of the entire CFO back office operation. And if you look at the challenge, they were processing more than 350,000 invoices and reduce the risk of duplication. And there were lots and lots of duplicate invoices. The duplicate invoicing handling team itself was 20 people and streamlined the entire accounts payable cycle. So Datamatics, we implemented a proprietary IPM as a solution, which actually flag the duplicate invoices so that first, duplicate payment is not made at all. So there is no point of collection. And second, that also the judgment is done by a human in the loop, a person who is handling as an exception management, whether it is duplicate or not. So the entire process, the entire platform, as well as the process standardization, help customer improve the quality up to 99.7%. And that, Vignesh, as you were talking about putting skin in the game, and that is the SLA we have set. So if we were beyond this, there were penalty and reward. So if we are less than 99.7, we have to actually pay a penalty. If we are better then customer is rewarding us also. The invoice processing time was reduced from 5 days, and this is the average because they have a different category of invoices, your factory invoice, project invoice, freight invoice, import invoice. So all the various invoices will have a different turnaround time, but the average was 5 days, which was brought down to 3 days. Improved accuracy and provided real-time visibility of our data, not only to the customer, but to supplier also, that where in the payment cycle their invoice is, whether it is lying for approval, whether it is approved and it is lying for the payment because of the payment terms and the number of days it will be paid after, which actually help improve lot of cash flow, as well as help customer to really capitalize on the early payment discounts. So with enhanced data security. And how we achieved, if you look at our bucket of platform tools and technology available with the Datamatics, TrueCap Plus is our AI ML powered, absolutely template free. It does not care of what structure, what template invoices, what supplier is sending. Any supplier sending any invoice in whatever format, it will still capture data with the highest level of accuracy. Then it will push data into IPM, which is a workflow, which is an authorization matrix, as well as validations, as well as two-way and three-way matching. So again, it will give all the exception handling would be done here. And then after finally approving the invoice, it posts through TrueBot. TrueBot is used to post into your system of records, whether it is ERP or any other system which you are using. And all of these are enabled by True AI, artificial intelligence and cognitive science platform. Finally, True BI for business intelligence and data visualization, for not only doing descriptive analytics, but also prescriptive and predictive analytics. So if you look at the Gartner Peer Insight TrueBot, we have got 4.5 out of 5, FNA BPO 4 out of 5, and we have got a recognition from all the major analyst organizations, including Everest Peak in our Everest Peak metrics as well.
So Navin, a question on that. Going back to the orchestration theme that we discussed, right? How and I think this is a good example to talk about that or relate to that. If you remember the orchestration that we spoke about, where different technologies coming together, ability to orchestrate to amplify the value. I think this is a good example where you have TrueCap, which is IDP document processing solution, and a RPA solution, and a workflow engine, and an analytics layer. So maybe if you can touch upon, could be a real example of the concept that I mentioned, right? How you orchestrating this?
All of them are individually, also as a product, but they are very well orchestrated and integrated also. So as you have rightly mentioned earlier also, that your one tool is actually not only complementing, increasing the value jointly for the user as well as for the customer and other stakeholders. And that is what is, for example, if you look at now IDP as a intelligent document processing, right, leading to the reporting, analytics, decision making, handling the entire procure to pay cycle, handling the entire order to cash, record to report, as well as financial planning and analysis. And this all these are all sitting on the being helped by TrueCap, TrueBI, TrueAI, IPM, and TrueBot. So all these are independent tools, but then helping customers as well as user to really execute and run the entire process seamlessly, and I must say straight through processing and touchless process.
Okay, we'll check if there are any questions.
Any questions? And Muskan, if there are any more.
Can we launch the poll questions? Would you like to go?
Please launch the poll questions quickly.
Okay, so I will share the results on the generative AI one first, which we did. I will just flash them on the screen. Yeah, these are the answers that have come in. Any inputs, any thoughts?
Yeah, as I said, lot of organizations are, it's not a surprise, first of all, for me.
Exactly.
Yeah, a lot of organizations are actively monitoring and even implementing this, testing out this in some shape or form. So at least for me, not a surprise. It's a validation.
Absolutely. Okay, I will go on to the second poll question for our audience. How are organizations thinking about future operating models? The options available to the audiences are shared services, hybrid, in-house, shore mix. Request everyone to please drop in their views and we will share the results later.
In the meantime, if anyone has any questions, I and Navin are happy to take it up.
Absolutely. Please put it on the chat box and then we'll take up that question.
Okay, so I will end the poll in about 5 seconds and share the results. Right? Maximum answers are on hybrid.
Again, not a
surprise, absolutely. Yeah.
All right. Third poll question for our audience is, are there any transformation projects within your organization? Simple questions, either it's a yes or a no.
Yeah, I see one question coming up.
Right.
What are the best practices for implementing automation? Navin, do you want to take it up based on your experience? Then I can add in.
Of course. In fact, Vignesh, we have already covered that through our journey. But again, the best practices are setting up the objective first. Most of the projects fail where people don't even know what they're trying to do. And then that is where, if you set your objectives and the goal, what you are trying to achieve, and then build roadmap around that, along with the change management, it has to be top-down approach, someone leading from a top. That is the best practice. I've seen most of the projects successful if they adopt that approach. But Vignesh, what's your view?
Yeah, I agree with that. One thing I would add is, in a lot of engagements, especially where it has failed, primary reason is there's a disconnect between finance function or the business process side and the IT side, right? So it is very, very important to onboard IT early in the journey, right? so that there is an alignment between business process and IT function early on. That I would say is very, very key to implement a successful automation, or for that any transformation.
And then there's another question now. Kapil has asked that where do you draw a line of how much automation is best automation? ROI being one of the parameters. So Kapil, you are absolutely correct. ROI being the best parameter to look at whether you have achieved the right amount of automation fitting your organization or your business case or use case itself. But apart from ROI, because ROI is one, there are other intangible things also. For example, we all have been looking at an NPS scorecard. We are all looking at a customer satisfaction. Till now, we were not even bothered about a supplier satisfaction, which is such an intangible. But think from a perspective of a happy supplier, means a happy flow of a raw material, quality raw material and time raw material. So looking at that intangible, it may not give you a financial calculation immediately, but it is an indirect helping you in a growth of the organization by producing the right quality product and delivering it at the right time to the customer, which will further increase your revenue, which you will not calculate from that you will not be able to calculate from that particular project perspective, because you are looking only for that project ROI. Vignesh, your thoughts?
Yeah, I would say the definition of ROI needs to be very, very clear upfront, right? So one organization can say 30% return on investment on cost. That is one factor of ROI. Say some industries, bottom line saving is not really important, right? So if taking healthcare as an example, profit margins are high, right? Whereas it's very different in CPG industries where they operate on very thin profit margins, right? So the definition of ROI is very, very important. In certain cases, cost may not be the biggest driver of automation, right? Like Navin mentioned, in certain cases, timeliness is much more important than cost savings. I've seen some organization willing to invest more for a better experience, right? And in cases which is customer facing, like collections, right? Experience related investments where ROI cannot really tangibly measured, right? So those are the things where you correlate the investment with, say, a top line or a NPS or a CSAT kind of a parameter. So to direct answer, where do you draw a line would really depend on what is your definition of ROI.
Vignesh, Navin, we have another question from David. That's in the current recessionary advents, how do you see CFOs reacting?
Very interesting questions, right? Again, this is a topic that we have been talking since towards the end of last year. The recession is gonna come. Whether it's already there, that's still a debate, right? So, in the current environment, there are some strong indicators of a recession, with some countries getting into the recession, New Zealand being the latest one. But I would see this more of a correction rather than a recession, right? So what it impacts is the organizations are taking cautious measures. Doesn't mean that investment are gonna go down. There are no significant changes in the approaches. There are some industries, some areas where we are seeing investment slowing down, cost savings taking the importance of cost saving becoming much more. But in terms of what it means for CFOs, what it means for transformation strategies, at least based on the current experience, we've not seen drastic changes. So organizations, unlike COVID, where it hit, the disruption happened, everyone jumped onto a solution that can give quicker ROI. Now, with the learnings from COVID, they are taking cautious measure, not just focusing on immediate ROI, but how can I make it future ready? How can I make it resilient with long-term objectives in code? Having any perspectives on this?
No, I totally agree, because look, the bubble was created by the hiring which was really going on from various organizations who were building in the anticipation that this COVID model is going to go long, and the entire business model was created for that purpose. And suddenly when everything started opening up, right, and that is where we saw all biggies really doing the headcount reduction to the extent of, I would say, 100,000 people were let go, right? So now it is stabilized, but of course, everyone has become conscious, as you have rightly mentioned, about a cost also. But I'm not still finding that growth in every, whether let's say automobiles in US, or growth not happening, or the sales not going up in any of the industry segment.
Agree. Yeah.
Perfect. I don't see any other questions. We've answered all of them.
Okay, great. And
I would like to thank all the audience and all the people who have attended the session, and I hope you guys have found it useful. Let us know, please touch base with us if you really want us to help us in your automation journey, and then we'll be more than happy to even discuss and basically guide you towards that what exactly are the objectives and how do you really want to achieve the transformation in your entire journey.
Absolutely, Navin. All right, in conclusion, thank you, Vignesh and Navin, for sharing your insights and experience. And to our audience who stuck around till the end with us, like Navin mentioned, if you have any further questions for our panelists, we are here to discuss, so we can take that up. And feel free to drop us a note at events@datamatics.com. Until next time, and have a fantastic rest of the week, everyone. Thank you so much for your time, and thanks, Vignesh and Navin.
Yep.
Thanks, and thanks everyone for your time. Have a nice day.
Yeah, thanks everyone.
Bye.
Have a great day. Bye-bye.